Hey everybody, October 17th, 2025 here with your after hours recap. So this morning we woke up and the stock market decided to gap down a little bit overnight, but you were going to rally right back through yesterday's lows and effectively just rally all day long. And what this has kind of led to is just an insane amount of chop within last Friday's highs and within last Friday's lows. With this absolutely massive range, it really does just feel like we are going to stay in this range while we start to get through earnings season. Now, I loved today, and part of the reason was we really got to see where money was going and where money was leaving. That's not to say that where money was leaving was necessarily a bad thing, because you started to still see some money kind of come out of the frothier places in the market, and you really didn't get maybe massive unwinds in more of the speculative names, but really just some follow through to the downside on maybe a little bit of an iron, where you're gapping down and you're not quite reclaiming all the way. Although it's still above the 20, it still technically looks fine. You are closing a little bit further down on the day, but more importantly, while the NASDAQ was pushing back higher and was reclaiming prior day low, there were some stocks, and I would say very, very positively, especially in the large cap space, that were actually taking out yesterday's highs. So while the NASDAQ couldn't take out yesterday's highs, guess what did? Right? Apple did. And that was very, very nice to see. It actually took out the last few days of price. Now, I will say Apple, like a lot of other stocks in the market, are still within Friday's highs. So let's not jump for victory just yet if you're a bull, but really, really nice price action while the NASDAQ undercut yesterday's lows and then started to reclaim them and then just grind all day. And Apple did a really nice job early on taking out yesterday's highs and then grinding all day. You had something very, very similar for NVIDIA, but let's just say, call it what it is, effectively closing just underneath yesterday's highs. But still, I thought price action was pretty good, bouncing off the 50 simple moving average. And again, Tesla, another one. Let's give Tesla a little bit of credit. Right at yesterday's highs as well, while the NASDAQ and the S&P 500 not so much. So that was very, very good to see. Obviously some of the names that I have continued to be short, something like UAMY, exactly the sort of price action I'd like to see, down another 10% today. Literally picture perfect. Could not ask for better price action. Super, super happy with what I'm seeing here. Probably would expect that as early as next week. We're down to the 20, allowing me to cover another little piece. So that is very good. We had a pretty big unwind within the gold sector. And we can go ahead and take a peek at gold futures. Huge pickup in volume today on the downside. I would suspect personally that we're probably at the tail end. Now, of course, did we bounce at the 5-day? Absolutely we did, and that will still get the gold bulls saying, oh, we'll bounce at the 5-day, and then you probably still got higher to go. That's fine. I don't think that there's anything wrong with that thinking, but you get this massive pickup in volume. You kind of couple that with very crowded long positioning, at least from the last check a few weeks ago. You get this very parabolic price action. You get Peter Schiff out there thumping his chest, telling you that it's more likely that gold goes to $1 million before Bitcoin. That kind of nonsense where every single gold bull feels on top of the world when you go absolutely vertical. And it's good to remember that sentiment typically precedes price, and everybody's just jumping for joy with this awesome price action, and that's fine. But I just want to caution everybody into thinking, when you've gone this vertical and you're bouncing at the 5-day, I remember just a few days ago, as I was short the name, Rigetti, guess what? Also bounced at the 5-day twice before ultimately going lower. No, I'm not trying to compare gold to Rigetti, but I'm just saying you get this very vertical move, you bounce off the 5 while you're still quite extended to the upside. I would not get too comfortable as a gold bull just thinking that this move is far from over. In fact, I would venture to say that the move for now is over. Again, could be completely wrong, but I did have a short in Nugget yesterday, and boy, what a pleasant surprise on this move back down. Filled the gap by a penny, where the high here is 154.67 and the low here is 154.66. So not too much of a surprise that you filled the gap. Again, you're gapping up a little bit in after hours. Gold, gapping up just a touch in after hours, but not really something that I would personally be buying the dip on. Gold miners got their asses kicked today, and you just kind of look at the gold chart and you'd say to yourself, more sideways, some chopping, some more breaking down seems to be more likely than not. I'd be very, very surprised if gold goes and quickly makes a new all-time high. Not saying it won't, not saying it can't, but really if you just kind of, put some logic into your brain, you go parabolic like that, especially with crowded positioning. There's a lot of people in there with profits to take, so won't be too surprised if next week we can continue some of what is today's trend. But just to kind of continue forward, we had really nice price action in Bitcoin, and I said this in the room, a few, I want to say, whatever day this was on here, 10-3, where, there were people trying to front run this breakout in Bitcoin. And I said to the people in the room, like, do you really think that buying it on the 5th green day in a row, not buying it out of a tight, consolidation, something a little bit better like 10-1, but instead you're coming in 10-3, is really the right thing to do in Bitcoin? Buying it as it's on its 5th, 6th green day in a row, buying it as it's a little bit extended, buying it without tightness, buying it without a risk off level? No. And that's not the right thing to do. And sure enough, what happens? Multiple down days in a row. Well, all of a sudden, everybody gets super bearish Bitcoin. And what do I actually think, in my opinion? And I come back out and I tell the people in the room, do you think you should be getting a bearish Bitcoin when it's down 7 days in a row? Just the exact opposite, and you're pulling back into an ascending 200 simple moving average? No. In fact, if you like Bitcoin, this would be the place to get long, using the 200 simple moving average as your, this is my line in the sand. So that's just kind of my thinking here. Bitcoin is kind of at that line in the sand. What we don't really want to see is, we don't want to see Bitcoin just consolidate, call it below 111,000 roughly, or 112, all the way to between 105 for like the next 4, 5, 6 days. That wouldn't be ideal if you're a gold bull, or a Bitcoin bull. You would really want to see price V-shape, not V-shape recover necessarily, but over the next 4, 5, 6 sessions, get right back up to 120,000, then begin to finish building out the right-hand side of the base. And then maybe at that point, I'll start to say, hey, you know what? Bitcoin's starting to look great. Coinbase starts to look interesting, et cetera, et cetera. But right here, right now, I wouldn't have been getting bearish today on this kind of action where you pull into the 200 simple moving average. You're going down 5, 6, 7 sessions in a row. That is actually a really good place to say, hey, I shorted against supply, 124,000, and now I'm going to be covering some into that potential support, the 200 simple moving average. And then if you don't have a long, this would be about the best place to do so. Obviously, going into the weekend, a little bit uncertainty in the crypto space, but I think that this would be kind of that setup where you limit risk the best. It's almost the exact opposite of what gold is, where gold gets so stretched to the upside, everybody gets bullish on this big stretch to the upside, and then it ends up unwinding in a big way. And then all of a sudden you get this big unwind in gold or in Bitcoin, and then now everybody's getting bearish, when in fact that's actually the best place to buy, to potentially anchor your risk to, right to the 200 simple moving average, where you say, hey, good above and bad below. And guess what Bitcoin's done every time it approaches this 200? It tends to bounce from that level. So if it's done it in the past, why can't it do it now? It's a very good place, like I said, to anchor your risk from, knowing, hey, over 104,000 basically, we're okay. So you buy it as close to that level as possible. Everybody is bearish Bitcoin. The market is chopping in a bit of a range, but ultimately here we are. You wick off that level, and then you can manage risk going forward. And obviously you saw some pretty nice price action in Coinbase today. a little bit of a gap down overnight, and then you just held well, which again, it did do a nice job, reclaiming the 50 simple moving average. This is what you want to see, similar to Bitcoin, going down several days in a row. You undercut the 50, you rally right back through. That isn't super bearish. That's price holding where it's supposed to. And again, there is like those, that last line of defense in terms of buyers where they're like, hey, you know what? You start to live below the 50, I'm out of here. But you held the 50, which is exactly what you want to see, similar to an NVIDIA that holds its line of defense right at the 50. Exactly what you want to see. So don't get overly bearish until price actually starts to confirm some of these levels. But obviously, on the flip side, don't get overly bullish when things are going absolutely vertical. Kind of use that sentiment to put yourself in the right position. And then, maybe you put yourself in position to get lucky with Bitcoin. Maybe you put yourself in position to get lucky like I did on NUGT. So that's just more of the thinking. Don't fall into, the all the bearish takes on social media with Bitcoin. Don't fall into all the bullish takes on social media with gold. Ultimately, you end up being the sucker who's chasing something too high or panicking out far too low or shorting something on the 6th, 7th green or red day in a row. That is just not how you do it. So just kind of food for thought there. And like I said, we had a bit more unwinding in the speculative stuff. We had a bit more unwinding in some of the nuclear stuff. You look at SMR and we talked about not owning laggards. Well, here's the exact reason why. You double top short sale, complete unwind yesterday, another 7% lower today. HIMS, which tried breaking out at $60, and I wasn't going to take this thing over 60. Why? Because it was already extended too much for its average daily range by the time it got to 60. Based on where it was at low of day, by the time you got to 60, that was more than it moved in its normal average daily range, so I was not a buyer. But guess what? I tried to buy it yesterday as a bounce off that $60 level, and it didn't hold, right? And instantly I got stopped out. I didn't sit there and hold a bag. And what happened today? Absolute catastrophe in that name. And I'm not sit there and trying to knife catch this whatsoever. And even when you get down to the 50, if you can't start to bounce from that level while the market's just grinding higher, it's a total avoid. And a very easy avoid today, and not something that you necessarily want to deal with. What goes from looking like pretty decent, resilient price action all the way to absolute trash. So, just be a little bit more cautious, chasing breakouts, especially when they've moved more than their average daily range. And typically, if a stock moves, like a HIMS 8% per day, right? Don't be buying it when it's up already 7% on the day. There's just not enough meat on the bone. If you're going to buy it, buy it when it's up 4% on the day and it's coming out of a really tight area. That allows, that stock to still push another 3, 4, 5% away from your average on the day that you buy it. So really kind of, something to think about when you're buying some of these names out of what you think is a clean setup. And then secondly, we've seen better action. Buying pullbacks into ascending moving averages, it typically lends to a tighter spot, just like we talked about in Bitcoin with already anchored risk. But you want to see price action start to turn up off of that moving average. You don't have to buy that falling knife into that moving average. I know some people can do it well, and that's fine. But personally, I wait for even just a smaller time frame to start to turn back up. And then I manage my risk versus that low. I know exactly where I'm out if I'm wrong. I know exactly what my percent risk is when I'm getting in. And those are the kind of things that, can lead to a nice, tight, controlled entry. Also, we had a little bit of sell-off in LEU. I don't think that there's anything wrong with this. You look at how vertical it went. You get another 8-9% down day today. Still nothing wrong with the chart. Obviously a little bit of a pickup in volume today, but just totally natural. You're seeing some of this money unwind from some of these very vertical names. I don't think that there's anything wrong with it. Obviously, ASTS for the aerospace and defense names completely understandable. You get a pretty nasty unwind yesterday, you get a bit of a gap down, and you go nowhere today, just down another 6.5%. But that's how these things can kind of go. Risk can kind of hit you fairly quickly. I did go ahead and trim another little piece of Rocket Lab today when it was losing the 10-day, and then it kind of just hung in there. So I've got a little bit less, but I still have a pretty decent position, and we'll just continue to let this work so long as we are hanging out over $62. That's working pretty well. ARC continues to just hang in there for me, and so long as we are above the 50, I am hanging in there as well. Nugget was an absolute monster for me today. I'm thinking a little bit bigger picture on gold. So, do I get hit with a little bit of a gap up on Monday? I don't know, but I'm pretty convinced, and I could be wrong. I'm wrong often. That today's highs in pre-market or overnight was about the high for gold, at least for now. Next few weeks, maybe a month, maybe two. I have no idea. But just based on positioning, my guess would be lower over the coming weeks. And that's something that, a thesis that I'll just kind of let play out over the next few weeks, and we'll see how that goes. Rigetti on the short side did not cover any more today. I think it's fine. I told myself if we started to reclaim the 10 simple moving average, I would cover a few more off. And what did we do? We came right into the 10, and then we rejected and closed okay. So really nothing for me to do there. Just kind of manage it. I did take off a third of my hedge. I did go long on this at 15.12 a few days ago, and it has effectively done nothing. And then today, when we started, kind of breaking down 14.90, I ended up taking off another tiny little, a third of my position. And I'm just trying to, de-risk some of the trade while it's not working for me. And some of my longs are, acting pretty decent. Tesla, I think, still acts absolutely phenomenal. Just really 5 inside days from last Friday's highs and lows. And I do like this thing. If we can get going over 443, we have earnings coming up, so we might not have enough time to kind of put this trade on, but maybe there's a scenario where earnings are pretty good, and then we gap up, and then we've got, maybe a high volume close setup or a nice earnings gap setup. And we'll see kind of what happens going into next week and that potential. Or maybe, we gap down and we push out until earnings. I don't really maybe get long anymore. And then, maybe on earnings we gap down a little bit, but continue to hold, this, what's the low here? That 411 level. So long as we're kind of hanging out above 400, I'm in from much lower, so I'm happy to just let it work. And in the meantime, this 50-day continues to catch up. So really, this trade has done nothing wrong ever since it broke out. You make a move up, you go sideways, you make a move up, you go sideways, you make a move up, you go sideways. That's kind of how charts move. So not too concerned right now with Tesla. And then, as I mentioned, UAMY has just been an absolute monster since the day I shorted it at 18.5. Phenomenal trade. My guess is we probably see singles as early as next week. So I don't know if that is true, but we'll see. And really not a ton else. Aerospace and defense names, a little bit of a breather. Your SNDKs are holding in there, I thought, pretty well, despite this, nasty down little day today where it rejects yesterday's highs. But ultimately, the daily looks fine. MU continues to be an absolute monster, hanging out right near highs. I mean, that's great. So nothing really wrong. There was a little bit of weakness in Oracle today, which, just kind of sucked, right? Pretty choppy, not what people want to see. What looks to be a little bit of a bull trap yesterday, and then you gap down, you give that up, and then you roll over pretty heavy today. Yeah, a little nasty, but I don't want to make too much of it while other things in the market are still continuing to act well. And then obviously you've got names like, American Express, just not new all-time closing highs. So, financials and the KRE might be struggling a little bit, but your credit card names are clearly not feeling that effect. And speaking of the KRE, after yesterday's ugly down day, they did get, they kind of held. They didn't go and make new lows today. So if we can reclaim the 200, I think that would be pretty good. If you cannot and we start to lose and go lower, I think that could be some added pressure to the market. Obviously, the Russell underperformed today, and that probably has to do a little bit with, those financials. 20% of the Russell is financials, so it's, kind of good to bear that in mind. You did have a little, kind of a down, ugly down move, but you held in there. So let's give it a little bit of the benefit of the doubt. We're basically once again trading within Friday's highs and Friday's lows, and so long as you're above the 50 simple moving average, I think you're fine. So that's just kind of my thinking for now, and we will continue to take it one day at a time, one setup at a time. And hopefully you guys have an awesome rest of your weekend, and I will see you guys Monday morning for pre-market prep, or I will see you guys in the room with any questions. Cheers.